Good afternoon, everyone. Let's take a look at these markets. It's May 3rd. The S&P 500, we're right at the midpoint of this range, basically holding just above the 50-day moving average, which is 138.79. And, of course, we have the 50% retracement also in that same area. We've been talking about that, 138.80-ish, basically. So that's our potential first level of support. Here, this isn't good to see here on this 10-minute time frame. That we're talking about the potential for a lower high, and then if we broke the support at 139.5, we would have a lower low. So right now, on a 10-minute time frame, we have a pattern of lower highs and lower lows, and we have a declining 5-day moving average. So we have to be very conservative here. Tomorrow we have the jobs report. I mean, we could see this market gap right back up above that 140.5, and if that were to happen, I think we would see a short squeeze rally. So as always, we have to be prepared for any scenario, but the main point here right now is that we have to show some extreme caution, as this market seems to be just kind of wanting to turn sideways and not make up its mind what it wants to do. Perhaps tomorrow we get a gap up, or we could even gap down and then set this market back up for a test of the 136 level. So it's anyone's guess, basically, and I wouldn't, we're not in the business of guessing. We're in the business of anticipating the potential scenarios and knowing when the risks are too high so that we can maybe step aside. And I think that's where we are, and that's the message the market's telling us with all this indecision and the back and forth and crossing of moving averages. 65 is a key level for the NASDAQ. We've spent most of the last couple months above that outside those 2 days, and we're right back on the 50-day moving average after losing a percentage point today. On the 30-minute time frame, let's actually look at a 10-minute time frame, because this is a level we had seen earlier in the week, this about the 66.70 to 66.80. We broke below that yesterday, got back above, but again, here we have the lower high, and now we broke below that lower low here at 66.50, and that lower low in the 66.50 level was also a 38.2% retracement of the recent rally. A 50% would get us to 66, and a 61.8% would get us down to $65.60. We've got all this volume that's traded changed hands just above, and that 67 level now looks like it should be formidable resistance from this point. Now we do have, like I said, lower highs and lower lows, but do we want to sell short after this type of decline, or look for a rally and then up to this prior 66.75ish, and then if it gets going, then we look to the downside. My personal preference is rarely to sell individual stocks short. I'm much more comfortable with the liquidity and less violent moves of the indexes. So when we're in this type of environment where we do see stocks imploding, a lot of times I'm not personally participating. I like to try to point them out, but I don't consider myself a very good short seller, and I don't know many very good short sellers who've been able to survive over time as well, and I've seen a lot of people come and go. I think you're better off either avoiding the market during these types of times, or if you're going to sell short, I think the indexes, that is the ETFs in particular, the levered ETFs. So not necessarily trading the Qs, but a derivative of the Qs, either double or triples, and that's up to you to decide which one's most comfortable for you. The Russell 2000, as we know, retraced 50% of its move yesterday on the open. That is, since the last couple weeks, and then rallied right up to that 5-day moving average, which it found resistance at. We were talking about a lower high in here as well, where we're back below the $80 level. We're into this, we're below this little band of what should have been support in here, between 81 and 81.5. So this Russell 2000 almost made it down to the 2/3 retracement. Tomorrow, if we got a bounce back up towards 81.25, would be pretty symmetrical, and maybe the 5-day moving average would come down and meet it. Then you short it below the volume weighted average price type of move. It's a dynamic market. Our plan has to be dynamic as well. But with a declining 5-day moving average and a pattern of lower highs and lower lows, with a overall range bound market though on the daily time frame, it says the bigger range bound market action says we don't want to take big bets in either direction, and that's unfortunately what a range bound market is about. The semiconductors got up to the top end of what's been its recent resistance near close to 35. Well, we were looking at the possibility it was going to run up to $35.30. 35 has been a difficult number where it spent some time. So this was basically the band of prior support, which became resistance at that 35 level. We can see. Right in here, 35 to 35.30 was basically that band of resistance, and we're showing. Let's just clear this up for a moment. We have what? We have a lower high, two lower highs, and two lower lows. So for this market to drop back down towards the low end of the range at that 33 level wouldn't come as a big surprise. It did get a little extended to the downside here today, so perhaps we rally back up towards this 34.50, and that's what we identified yesterday as, or the last couple days, that if we broke below 34.50, we wanted to become much more cautious on the market overall. And today we saw 2,100 advancing or declining stocks and only 892 advancers, so it was pretty widespread selling. I think the financials. Let's take a look at those real quick, because the financials, they're kind of holding in this area of basically not doing a whole lot. 1550 is what we're going to need to see recaptured in here if we're going to have any confidence in the upside. So still want to maintain a high level of defense in all of these markets. We do have some 50-day moving averages are starting to flatten out a little bit, but for the most part they're advancing, and we're in range-bound markets, so keep that in mind. The stocks that we were looking at, even through the afternoon, that barely made the cut include NetEase. I think you can still watch it. I don't have hopes for it for tomorrow necessarily with this declining 5-day moving average. And a lot of setups really got destroyed. Fran, for instance, we were hoping for a pullback and then some strength. And, here today, this stock just got destroyed. Now, had you gotten involved, like I said this morning, you might have gotten involved right here as it got back above the volume-weighted average price, and a stop should have gone underneath this low right here. It sucks taking a loss, but if you're in at about 30, let's just call it 31.50, and out at 31, a 50-cent loss, it sucks to take that, but at the end of the day, it would have closed another $1.50 lower, and defense wins the game. There's no such thing as winning all the time, and what was a good-looking chart is now kind of looking mediocre once again. So I don't think you want to keep your eyes on that one for tomorrow. Tower still holds up, and here's a good example of one of the stocks that we're waiting for to move past resistance before we purchase it. $4.79 has been the high the last couple days. If we can get up through that, then we take a shot with a stop probably just below that 5-day moving average in today's low, so about 465. I do like the way this one is still set up, so I would keep an eye on that one. Dang did not give us a reason to purchase, and like I said this afternoon, maybe an alert at about 850, but if we're avoiding losses, that's good. That's better than a lot of people. I know it's different than making money on every trade, but if we're avoiding losses and keeping our cash liquid for when the market tells us it's okay to redeploy and says that, hey, we're breaking out past resistance, and then it makes higher highs and higher lows, that's what we're waiting for. We're waiting for the market to tell us. We're not trying to force our opinion here like on Las Vegas Sands, which broke down, and there's no reason to continue to watch that one. A couple stocks I would watch for tomorrow, very limited. CTCM, we had this one on our list earlier this year, and it got right up to that 200-day moving average today, so be aware of that. But it did have some good volume and held on to the gains for the most part. We're slightly below the VWAP, but I think if you got it back above 1145 tomorrow with a worst case stop just below probably about $11.23, that CTCM could continue to move higher. It's a low probability that it will go, and I think that tomorrow is a good day to practice your golf swing. Now that we're here in May and it was time to sell and go away supposedly, I don't think that you have to do that, but we've got the jobs number in the morning, and again, an open mind and having some candidates to go to. One of the stocks that I completely ignored it, and this is a line I had drawn in I think 2 days ago, was this VHC. I set an alert at $25, completely ignored it today, but this is a good example of why we want to continue to pay attention to some of these stocks with good setups, because they they often get that little shakeout and then take people by surprise. And here on this weekly chart, I think this stock still has some room to run, but if I remember correctly, I think they have earnings due within the next couple days. I think maybe the 10th, and I don't know why I remember that, but you can't chase this stock at this point. I'm just bringing it up to say, if you're paying attention, there are still opportunities, although they're very limited. The main lesson I think that there's two lessons that I think we can learn this week. And I know it's only Thursday, but again, we've known that this market has been kind of range bound, and we can't do those cheat entries where we're looking for getting involved in momentum before it actually triggers. This week we avoided getting into CERS above this 406 level. We didn't make money, but we didn't lose money, and a lot of people probably did lose money who were getting involved early on that stock. Dang, we didn't lose money. Other people probably did. Elon was a great example of we were waiting for it to get above that 1450 level. It didn't get above, so we didn't purchase it, and we sidestepped another landmine. FIO, earlier in the week, a lot of people were excited about the earnings. We were looking at it over here and never got involved. It broke down, and we've avoided a big loss. IRE, we were talking about this one. It was the Irish bank saying it needed to get above $6.30. Well, the next day it gapped lower, and it continued lower today. So these stocks, LVS today, NTES, we haven't gotten involved in that one yet. Ren we didn't get involved in. We were looking for a move above today's highs. So it's we're avoiding. We're still looking at setups, but the setups aren't triggering, and we are avoiding losses by not taking them. The other thing I want to point out is the phrase, and I made fun of this one, didn't make fun of it, but people get excited about these stocks like Arch Coal. They say, hey, it's a big name company, it's a good company, and I think it was on Wednesday some people were getting excited because it blipped up, and again, this is last week, if you recall, I brought up that one chart of the Colorado snowpack, and I'm going to bring it up really quickly here because I was talking about some of these stocks that look like this, and I was saying that the snowstorm that was here in Colorado maybe a week and a half ago and what it did to the downtrend that it's in. I said that this is just a blip in a longer term downtrend. We can be guaranteed that this one will continue because that is down towards the low, but the same thing is true with stocks. I mean, like this Arch Coal, it was a blip in a downtrend. It's guilty till proven innocent. There will be, nice little trades, and people call these short squeezes. These are knee-jerk short squeezes. The shorts are correct in stocks like ACI. The shorts are correct in a chart, company like CHK. They've got the story right. They are in control. They might get squeezed for a day or two, but these longer-term trends simply do not reverse on a dime. RIM, there was, people talking about RIMs turning around, and the fact is it's still in a downtrend. It's guilty till proven innocent. If you're looking at investing and putting these away for your grandchildren, the evidence still isn't there yet. We still have declining 50-day moving averages, and here in RIM we got above that declining 50-day moving average for a couple days. That got people excited, but we only got up to a prior level of support, which then became resistance here a month ago. Soda, here's another one. It's in a downtrend below a declining 50-day moving average. Green Mountain Coffee Roasters, this has been one of the stupidest stocks there is over the last year or so, with all these gap ups and gap down, and with a declining 50-day moving average and just this crazy volatility. It's a good avoid. DEC, same thing. People were bottom fishing here before earnings saying, hey, it looks like it's going to break the 50-day moving average, and they got trapped on the move above the 50-day moving average a couple months ago, and then got trapped again right below it. The WPRT was one that people are looking at. The stories, when the momentum breaks, it's game over for a while. We saw it last year in Netflix that people were trying to pick Netflix up all the way down. Let's take a look here. All the way down, it was down too much, and they get a couple days of bounce and get all excited about it. These stocks are guilty till proven innocent. They're in downtrends. We spoke about it with LDK Solar here when it bounced on the earnings. Point is, avoid making the dumb mistakes. Keep your cash ready. The market isn't giving us good entries right here, really long or short. I think that, you know, probably you're better off with some shorts, you know, the way it, you know, the market's been moving. But they are really highly sensitive to these little squeezes. And anyway, that'll do it. Thank you.